There's a layer of the global economy that operates beneath the headlines, beyond the reach of governments. It's quiet, it's in the background, and it's run by a handful of private companies that move the physical world. This is an explainer on how they do it.
To really understand how this system works, you have to start with a paradox, a moment in time when the world on our screens moved in one direction and the real, physical economy moved in the complete opposite.
The public story was clear. After weeks of crisis, a ceasefire was finally declared in the Middle East. Diplomacy, it seemed, had won, and the financial markets reacted exactly as you'd expect. Oil futures fell, and they fell fast, 12% in just a few hours. On screens everywhere, the crisis seemed to be over.
But here's the contradiction. Away from the trading screens, the price for an actual physical barrel of crude oil, the kind a refinery needs delivered, didn't go down. It started to climb. So you have two signals. The screen price was signaling relief, but the physical price was signaling real, genuine scarcity. This wasn't some kind of market glitch. It was a rare glimpse into who really controls the flow of critical goods when the world is on the edge.
So if it isn't governments and it isn't the big public corporations, who exactly is operating in that gap between the screen price and the real world?
Well, think about how our normal institutions are built. They're designed to avoid risk. Governments, they issue statements, they do diplomacy. Public oil companies like Shell or BP, they have shareholders to answer to, so they steer clear of danger. And banks, well, banks have committees that stop them from financing unrecognized groups or operating in a war zone.
The answer is a small, very private group of commodity trading firms. Now, these aren't just brokers. They use their own money, they own or charter the ships and the storage tanks, and they operate in those legally and politically gray areas that every other major institution is built to avoid. The sheer scale of their operations is almost impossible to grasp. Take just one of them, Vitol. The volume of oil and refined products it handles every single day is the same as the combined daily consumption of Germany, France, Spain, the UK, and Italy. All of them, together. And to put that in financial terms, that revenue figure is bigger than the entire GDP of many countries. These aren't just niche companies. They are global powers with the financial might of sovereign nations.
In fact, if you combine their financial footprint, it's bigger than the entire export economy of Japan, a G7 country. And yet, they remain almost entirely invisible to the public. Their expertise wasn't built in stable, predictable markets. It was forged in a moment of complete chaos.
To understand where their power comes from today, we actually have to go back to the early 1990s and the moment an entire empire just disintegrated.
Imagine this. In factory towns all across Siberia, the machines are still running, they're still churning out aluminum, steel, copper, but the entire state system that priced it, sold it, and moved it to market has vanished overnight. This is the environment these traders walked into. It was an economic vacuum. The price of aluminum inside Russia was just a tiny fraction of what it was worth on the London Metal Exchange. But to get it there, you had to operate with no real legal system, no reliable banks, conditions that would paralyze any normal company. So what they built in those years wasn't just a series of profitable trades. It was something much more durable. It was a private infrastructure, the relationships, the logistics, the deep first-hand knowledge needed to move physical things out of a broken system. And that became their blueprint. The skills they honed in post-Soviet Russia soon became a repeatable model, one they could deploy anywhere in the world where state systems began to fracture. Let's fast forward to 2011. Libya is in the middle of a civil war. The rebels control huge swaths of territory, but they have no official government, no access to banks, and, most importantly, they are running out of fuel. NATO was providing air support, but nobody was willing to provide the fuel to keep their trucks and tanks moving on the ground. The CEO of Vitol at the time, Ian Taylor, actually went to Western governments looking for some kind of guarantee, some insurance, some financial backing, but all he got was encouragement. Essentially, you'll be all right, go ahead and do it. So Vitol acted on its own. They decided to extend hundreds of millions of dollars of credit to a government that didn't legally exist yet. They organized the incredibly complex logistics of shipping fuel into a war zone. And those actions, taken by one private company, were decisive. They are what enabled the rebel advance that eventually toppled the Gaddafi regime.
Now, this unique ability to operate in chaos has profound consequences for all of us. Because when a critical point in the global system breaks, the disruption cascades everywhere. And these are the firms positioned to manage that chaos and to profit from it. The Gulf crisis back in 2026 showed us that the Strait of Hormuz isn't just about oil. It is a fundamental pillar of the entire global industrial economy. Nearly half the world's traded sulfur, a third of its helium, and over a fifth of its aluminum all have to pass through that one narrow channel of water. So when it was disrupted, the first and most immediate impact was felt in agriculture. With key ingredients like sulfur trapped, the global price of fertilizer shot up by 70%. And the timing couldn't have been worse. It was right in the middle of the planting season for the entire Northern Hemisphere. The human cost of this one logistical failure was spelled out very clearly. The World Food Program issued a warning. A long disruption could push an extra 45 million people into acute hunger. A direct line from a fractured supply chain to a global food crisis. You see, these events aren't really anomalies. They're data points, and they form a pattern that is starting to define the new reality of how our global economy actually works. As the world breaks apart into competing economic blocks, as sanctions become more common, and supply chains get more fragile, the importance of those who can operate in the fractures, it only grows. They are, in effect, becoming the default system for moving the world's essential goods when all the other systems fail. From a farm field in Kansas to a factory in Germany, their decisions are what shape the physical reality of our world. Which leaves us with a final question. It's not about whether they exist, but whether they've become indispensable. Is this a system that we actually chose, or is it simply one that emerged to fill the void that we left behind?